Let me ask you something. You had a plan, a real one. You knew your entry, you knew where you were wrong, you had your size dialed in. You sat down, you executed, and then the market moved against you. Not catastrophically, just enough. Just enough to make your breathing change. Just enough to make that little voice in the back of your head start negotiating with the rules you made when everything was still calm. And here is the question I want you to sit with for the next 30 minutes. Write in the comments where you're watching from and what time it is where you are. I genuinely want to know who's in this room with me. And if this video hits something real for you, subscribing and liking costs you nothing, and it keeps this conversation going. In that moment, when the position is open, when the number is moving the wrong direction, when your chest is tight, who is actually making your decisions? Because most traders will tell you it's them, and most traders are wrong. What I'm about to share with you is not a system. It's not a setup. It won't tell you when to buy or when to sell. What it will do is show you the thing underneath all of that. The one variable that determines whether everything else you know actually works when it counts. And it's the thing that almost no one talks about honestly, because honestly, it's uncomfortable. Jesse Livermore, the man who made and lost fortunes that would be worth billions today, who shorted the 1929 crash and walked away from it richer than almost anyone alive, that man was destroyed in the end, not by the market, by himself. And the gap between what he knew and what he could do under pressure is the most important lesson in trading that you will ever encounter. Stay with me, because we're going in deep today. And before we go any further, if you haven't subscribed yet, do it now. Not for me, but for yourself. Because the content on this channel builds on itself, and you don't want to miss the next piece of this conversation. Hit subscribe, hit like, and let's keep going. Here's the thing most people get wrong about trading psychology. They think it's a personality problem. They think some people are just wired for this and others aren't. They think calm traders were born calm, that discipline is some kind of character trait you either have or you don't. And that belief, that comfortable, flattering belief, is exactly what keeps most traders stuck. Because if calm is just a personality type, then you're off the hook. You can say, I'm just too emotional for this. Close the tab and go back to whatever you were doing before. But if calm is a skill, something built, not born, then the failure to build it is on you, and that's a harder thing to sit with. Here is what I've found to be true, and what Livermore's entire life demonstrated in the most dramatic way possible. The problem is never the strategy. The problem is the gap between the strategy you built in stillness and the person you become when real money is moving in real time. Think about the last time you broke your own rules mid-trade. Not because you forgot the rules, you remembered them perfectly. You broke them because in that specific moment, the emotion was louder than the structure. Fear of missing out was louder. The need to recover a loss was louder. The embarrassment of being wrong was louder. And the plan, the perfectly logical, well-constructed plan, got overridden by something older and faster and much less rational. That is not a character flaw. That is human neuroscience. That is the way every human brain responds to perceived financial threat. The prefrontal cortex, the part that made your plan, goes quiet. The amygdala, the part that handles survival, takes over. And suddenly you are not a trader executing a strategy. You are a person trying to survive a threat. Understanding that distinction is not an excuse. It's a starting point. Because once you understand what's actually happening in that moment, you can start building something that addresses the real problem instead of the surface one. Most trading education addresses the surface. It gives you better systems, more indicators, tighter rules, and none of that is bad, but it is incomplete. Because a better system still fails when the person running it is in a state of psychological chaos. Livermore knew this. He wrote about it. He lived it publicly and painfully. And the tragedy is that most people read his story as a trading story when it was really a psychology story from beginning to end. Let's start at the moment everyone knows but nobody talks about clearly. Your position is open. The market has moved against you. Not enough to hit your stop, but enough. Enough to start doing math you weren't supposed to be doing. Enough to start asking, what if I just move the stop a little? Enough to make you open a new tab and start looking for confirmation that you're still right. That moment, right there, is not a market problem. The market is doing exactly what markets do. It is moving. It doesn't know you exist. It doesn't care about your stop or your size or how long you worked to build that account. It is simply moving, driven by the collective actions of thousands of other participants, all of them carrying their own fears, their own hopes, their own stories. What is happening in that moment is a collision between two versions of you. There is the version of you that made the plan, calm, logical, prepared, working from principle. And there is the version of you that is now sitting in the trade, reactive, emotional, running the kind of mental calculations that feel like analysis, but are actually just anxiety wearing analysis as a costume. Livermore called this the difference between reading the tape and fighting the tape. And he made that mistake enough times, publicly enough, painfully enough, to understand it in a way that most of us only understand theoretically. Here is the first thing his life teaches us. Calm is not the absence of emotion. That is the most dangerous misconception in trading. If you are trying to feel nothing while you trade, you are not building discipline, you are building suppression. And suppression breaks every time. Under enough pressure, whatever you have been pushing down comes back up with interest. Real calm, functional calm, the kind that actually holds up when your account is down and you've had 3 losing days in a row, is something completely different. It is the ability to feel the emotion fully and not let it drive the decision. To notice that your chest is tight, that fear is present, that the urge to do something is almost unbearable, and to let all of that be there without letting it touch the mouse. That is the skill. And it is a skill. Livermore built it through years of expensive, humiliating, repetitive failure. Not because he was naturally disciplined. He was famously not naturally disciplined. But because the cost of not building it kept destroying everything he worked for. Now, the second thing his story teaches is about preparation. And I don't mean preparation in the vague motivational sense. I mean something very specific. The time to make your decisions is not when the market is moving. Read that again. The time to make your decisions where you're entering, where you're wrong, what you do if the market does something unexpected, is when the market is still. When your emotional state is neutral, when the number on the screen is not actively doing anything to your nervous system. Because the plan you make in that quiet state is made by the rational version of you. And when the market moves, you do not want to be making new decisions. You want to be executing old ones. You want to be following instructions left by a calmer, clearer version of yourself who already thought through the scenario you are now living inside. Most traders do the opposite. They think about the trade while they're in it. They adjust the plan based on how things feel in the moment. And how things feel in the moment when real money is moving is almost always wrong. Not because they're stupid, because they're human. Because the brain under financial stress is not a reliable analytical instrument. It is a survival instrument, and survival brain and trading brain are not the same thing. Livermore's second principle was acceptance. Not resignation, not indifference, acceptance. He accepted before every trade, genuinely and completely, that he might be wrong. That the loss was a real possibility he had already made peace with. And what this did, practically, is remove the fear of being wrong from the equation. Because you cannot be afraid of something you have already accepted. When you enter a trade still secretly hoping on some level that you will never have to take the loss, that the trade will simply work out because you need it to, you have already compromised your execution. You will hold too long, you will move the stop, you will do anything to avoid the moment of confirmation that you were wrong because some part of you is treating being wrong as a verdict on your identity rather than just information about a trade. The loss is not a verdict on your character. It is data. That's it. Expensive data sometimes, but data that can be used, learned from, and folded into the next decision. The trader who treats every loss as evidence that he doesn't have what it takes will never, ever build consistency. Because consistency requires the ability to be wrong cleanly, to take the defined loss, to close the trade, and to come back tomorrow without carrying the emotional weight of yesterday into today's decision-making. The third principle is patience. And I want to say something about patience that doesn't get said enough. Patience is not waiting. Patience is trusting that the right setup will come and being genuinely okay with missing setups that aren't right. Those are two completely different psychological states. Most traders who think they're practicing patience are actually just waiting anxiously. They're watching every candle, looking for permission to enter, convincing themselves that this one almost qualifies, that if it just does one more thing, they'll have their signal.
They are not patient. They are tense and eager and dressed up as patient.
Real patience looks different. It looks like genuinely not needing the trade to happen today. It looks like the ability to close your platform and walk away without the nagging feeling that you missed something important. It looks like trusting that the market, which has been producing opportunities every single day for over a century, will produce another one, and that you would rather miss 10 mediocre setups than force yourself into one bad one. Livermore said the train that left the station 5 minutes ago is not the last train, and he was right. But knowing that intellectually and feeling it viscerally when you're watching a move you didn't take continue to run, those are two completely different experiences. And bridging that gap is part of the psychological work. Now, I want to mention something here, because the ideas we're covering, preparation, acceptance, patience, they don't exist in a vacuum. They compound. Each one supports the others. You can't really practice acceptance if you haven't prepared thoroughly, because without a clear plan, every market movement feels like a decision you need to make right now. You can't practice patience if you haven't accepted that being out of the market is sometimes the correct trade. These things build on each other, which is why shallow engagement with trading psychology rarely works. It's not enough to hear this once. It needs to be lived, tested, broken, and rebuilt. And if you're finding value in this conversation, and I hope you are, please subscribe and like the video. It genuinely helps this channel reach people who need it. And there are a lot of people in trading right now who are suffering silently because they think their problem is their strategy when their problem is everything we're talking about right now. Here is the part of Livermore's story that most people skip over because it's uncomfortable. He knew all of this. He wrote about it. He articulated the principles of discipline and patience and emotional control more clearly than almost anyone of his era. And he still blew up. Multiple times. Spectacularly. And the reason, when you look honestly at the pattern, is this. Knowledge of the principles and embodiment of the principles are separated by a gap that only experience can close. And inside that gap lives the most dangerous emotional state a trader can enter. Not greed, not overconfidence. Those get all the attention. The most dangerous state is the fear that arrives after a losing streak. Not fear of the next loss exactly, something deeper. The fear that you have lost the ability to read the market at all, that whatever edge you had is gone, that you are finished. If you have ever felt that, and I suspect many of you watching this have, then you know exactly what I'm describing. The tape stops making sense. Every setup looks like a trap. You enter, and it goes against you. You stay out, and it runs. The paranoia starts to build. And underneath the paranoia is a very specific kind of despair that no indicator can address. Here is the shift. Here is the realization that changes everything. You cannot trade your way out of that state. The instinct, the almost irresistible instinct when you are in that hole, is to find the trade that proves you still have it. To manufacture the win that restores your confidence. To push through the confusion with aggression. And every single time you follow that instinct, you make it worse. Because the forced trade, the trade you take because you need a win, not because the setup is right, carries emotional weight that compromises your execution from the very first second you enter it. And sometimes, terrifyingly, the forced trade wins. And that is the worst possible outcome. Because it teaches your brain that pushing through psychological disorientation with aggression works. And it will use that lesson at the worst possible moment, on the largest possible position, to the most destructive possible effect. The real move, the sophisticated, disciplined, counterintuitive move, is to stop. Close the positions, hold the cash, walk away. Not to study, not to review, to rest, to let the noise settle, to come back to yourself before you come back to the market. This is not weakness. This is one of the highest level decisions a trader can make. The ability to recognize when your judgment is compromised and to protect your capital by doing nothing, not dramatically, not permanently, just until clarity returns, is rarer and more valuable than almost any technical skill in this business. The market will be there when you get back. It has always been there. It produces opportunities every single day, in every condition, in every era. You do not need to catch every move. You need to be in the right state to catch the ones that matter.
and you will never be in the right state if you are exhausted and frightened and trying to prove something to yourself through a position size.
So what does this actually look like in practice? Not in theory, not in some idealized version of a trading life. In the real version, the one with rent and stress and 3 losing days and a chart that makes no sense. First thing, build your plan before the market opens. Not a vague intention, a specific plan. Entry zone, invalidation level, position size, and crucially, what you will do if the market does something you didn't expect. Think through the scenarios when the market is closed and your emotional state is neutral. Then, when the market opens, your job is execution, not analysis. You are following instructions, not making new ones. Second thing, start keeping a trading journal, and I don't mean a spreadsheet of your P&L. I mean a journal of your internal state. Before the trade, what was I feeling? What was I afraid of? What was I hoping for? During the trade, what changed? What did I want to do? What did I actually do? After the trade, what does this tell me about my psychology? Over time, and it takes time, this is not a one-week fix, patterns will emerge. You will start to see that you always make the same mistakes under the same emotional conditions. Maybe you overtrade when you've had a winning streak and your confidence tips into arrogance. Maybe you go tight and hesitant after a loss and miss entries you should have taken. Maybe you always hold losers too long when you entered the position with too much conviction and your ego is wrapped up in being right. Once you see the pattern clearly, you have something you can actually work with. You can build a rule. You can catch yourself in that specific emotional weather and choose differently. Not perfectly, not every time, but with increasing consistency. Third thing, and this one is simple but real, give yourself permission to not trade. There is no rule that says you have to be in the market every day. There is no productivity prize for placing the most orders. Some days the conditions are not right. Some days your emotional state is not right. And on those days, the most profitable thing you can do is close the platform and come back tomorrow. That sounds almost insultingly simple, but the number of accounts that have been damaged by the inability to do it is staggering. Fourth, when you feel the urge to move your stop, ask yourself one question before you do anything. Is this a logical adjustment based on new information about the trade setup, or am I trying to avoid confirming that I was wrong? 9 times out of 10, you already know the answer, and the question alone is enough to stop you. You don't need a system that works perfectly. You need a self that works well enough to let the system do its job.
Livermore's story does not have a happy ending. He made more money than almost anyone of his time, rebuilt from nothing more than once, understood the market at a level that still impresses people 100 years later, and he ended in bankruptcy and tragedy. And I think about that sometimes, about the gap between knowing and doing, about how you can carry the right principles in your head for decades and still, in the wrong moment, under the wrong pressure, let the emotion override everything. It is not a comfortable story, but it is an honest one, and honest stories are more useful than comfortable ones. Because what Livermore's life actually shows you, underneath the legend, underneath the trades and the fortunes, is that this work is never finished. You do not arrive at a point where the psychology is solved and you are free. Every day in the market is another opportunity to either honor the discipline you've built or abandon it. And the days that test you most severely are not the days the market is at its most volatile. They are the days you are at your most vulnerable. The days after losses. The days when confidence is low. The days when you sit down at the platform carrying weight that has nothing to do with trading and everything to do with being human. On those days, the goal is not perfection. The goal is not even profit. The goal is to not make the thing worse, to protect what you have built, to close the platform if you need to honor the plan even when, especially when, every instinct is telling you to override it. You are playing a long game, a very long game. And the traders who understand that, who measure their progress in months and years, not in the outcome of any single trade, are the ones who are still here, still learning, still getting better, long after the people who needed to be right immediately have burned through everything they had. Progress is the metric, not perfection, not any specific number in any account on any given day. Progress, the ability to stay calmer than you are 6 months ago, the ability to catch yourself one step earlier in the spiral,
the ability to look honestly at what your journal is showing you and adjust without defending yourself. That is the work. It is not glamorous. It does not make for great screenshots, but it compounds quietly, invisibly, and over time in a way that eventually becomes unmistakable. You are building something. Don't let one bad session convince you it isn't real. If this conversation gave you something today, subscribe to the channel, like the video, and leave a comment below. Tell me what the hardest part is for you. Is it the panic when the position moves against you? Is it the urge to force a trade after a loss? Is it the second guessing that comes after you've already broken your own rules once? Tell me, because this channel grows when you engage with it, and the more you tell me what's real for you, the more precisely I can make content that actually helps. I'll see you in the next one.